This setup is so simple that most traders completely ignore it. But if you miss this one detail, the setup entirely fails. So I'm gonna show you exactly what it looks like, when to take it and when to stay out of the trade. Let's waste no more time and let's go straight to the chart. So this is a concept that I have talked about a lot recently, and we are here on Nasdaq. You can trade this on CFDs, you can trade it as futures, as whatever you want to trade it. I'm gonna show you exactly how the setup looks. But I'm also gonna clarify one rule that's gonna give you way higher winning percentage compared to the strategy that I already showed you, that many people have already gotten funded with those past 2-3 videos that I have uploaded for free on YouTube. But here I'm gonna show you and share with you a very nice secret which is gonna increase your winning percentage by a lot. And this secret is no other but bias. So you take the trades that I'm gonna show you how to take only with bias. So since we have this opening gap as we are talking this week, as of the making of this video, you have this enormous opening gap that we know that at some point will be filled for sure. Very good. So my bias is absolutely bullish. This strategy will take place on the 5 or the 15-minute time frames. Now, does it work on other time frames? Yes, it does. But for us intraday traders, try to look at the 5 and 15-minute time frames only and do not overcomplicate things. I will show you exactly when the setup happens. Do not fast forward the video because you will never learn how the setup works. So we know, and in order not to be confused, I will draw two horizontal lines, one at the top of this gap and one at the bottom. We know that price, I will delete this one, needs to fill in this gap, so my bias is absolutely bullish. So we leave that as it is. Now the concept that I'm gonna be talking about is the concept of the double FEG, as I'm calling it. Meaning that you have one FEG from the one side, which is this fair value gap in this occasion right here, and let me zoom into the fair value gap. So you have this fair value gap right here, okay? You're not using the fair value gap at all. Let me do that. And when you see a new fair value gap being created from the other direction, so you see we also have this fair value gap right here, which has been created. You would be using that to go short instantly. Now, the thing right here, and this is exactly why this video is super important, you will not be going against your bias. Your bias, and I will show you a real trade as well, that I took this trade and I'm not just talk. Your bias is bullish here, it is not bearish, so you are not taking this trade towards the bearish direction. You are taking it only towards the bullish direction. But you will tell me, Chris, what do you mean the double FEG has been created for a bearish trade? I will tell you, you will wait for the exact opposite thing to be created, my guys. So you will wait right here, and you see we have created two fair value gaps. One fair value gap is this one right here, and I can go ahead and zoom in, this bearish FEG, and we have this fair value gap which has been created right here as well. Let's see if we have a double fair value gap being created. Not yet. Here we already have it. Okay, I can delete that because we already have this one from the bearish side and we also have this one from the bullish side. So you're waiting for such opportunity to be created, and when this thing is created, again you can go ahead and either enter instantly here or you can wait for a retracement back to the area. Now, because I don't want you to be missing out those trades, do not say I'm not gonna be entering instantly, because this is a loser's mindset. You should be entering instantly. Many times price will not come back, and you should be placing your stop loss not even exactly below the double FEG, but I would give it a little bit more space. So your trade should either be this one or even this one. So your stop loss should be this one, maybe even better, but for the time being below this candlestick which is, let's say, the second candlestick out of the three that created the double effigy. This is where you should be taking your trade from. Okay, and we are gonna take this trade together, and then I'm gonna show you that I also took this trade. So the stop loss will go exactly right here, and your take profit will go exactly up there. And we are in the trade, as we can see. Look how quickly you will be hitting your profit, your 3-to-1 reward to risk. And now you will tell me, Chris, you didn't take this trade, and I'm gonna show you that I indeed took this trade. We are at the very same place. I took this on my Hola Prime CFD's account. You can see this is the exact same trade, and you can see the dates as well. Of course, this is different time than the EST time that I have here, but this is the exact same trade, which I saw a little bit later on. But I took that even on this retracement. I think I even got a better feel on this trade, and I went ahead and targeted the top of this beautiful area, as I told you. So this is not something that I'm telling you to do and that I'm not doing. Those trades have been taken on Hola Prime, which is also the sponsor of this video. Hola Prime is a revolutionary prop firm offering both CFDs and futures. Go ahead, click on the first link down in the description or in the comment section and use code ChrisFX to get your 30% off even on instant funding accounts. Let's go ahead and show yet another example with this strategy. And as I told you, you should be going ahead and you should be interchanging between the 5 and the 15-minute time frames, something that I'm teaching in my community, also for my ultimate ChrisFX block strategy, which is even better than this strategy right here. I'm using those two time frames, and I want you to be zoomed in like that, and I also want you to take only trades towards the direction of the trend, which is bullish. And tell me if you have already seen our next trade with this concept of the double FEG, and if you haven't, you should pay closer attention. Here you're not doing anything, but if I zoom in even further, you will see how apparent the trade is. Now, one mistake that you guys are doing is that you're having your charts like that. I want you to increase them in the vertical direction. I want you to go ahead and zoom in the vertical direction, so that you will be able to see, as an example, that right here, right now, we have already created a fair value gap. Now it is pretty apparent that we have created a fair value gap. Now, if I play out price action, you will see again that I have created another fair value gap from the other direction. And if I go ahead and show you which one it is this one. So I have a bearish FEG and then a bullish FEG being created, creating my double fair value gap concept. I take the trade right here, the stop loss, as I told you, not exactly below the double FEG. Theoretically, you can do it right below, this candlestick. But if you think this is an enormous stop loss, which is not in this occasion, it is only an 89 tick stop loss, you can do it a little bit above, but give it enough space and target, as I told you, at least a 3-to-1 reward to risk with this strategy. At least. I'm going for 5-to-1 many times. Take your trade instantly. Okay, of course this is a market execution. We are just showing on replay mode how the trade will look. Place a stop loss. Okay, I would even advocate that your stop loss right here should be below this area, so let's do it properly and go ahead and place a take profit at 3-to-1 or more and let the trade play out. Simple as that. Don't think that the stop loss is enormous. The concept happens again and again, and if you are zoomed in a lot, you will see that the concept has already happened again. We have a bearish FEG right here, followed by a bullish FEG, which is this one right here. So what am I doing, Chris? I'm taking the trade over here with a stop loss. Maybe this is a good stop loss. Yeah, we can do that. And you can go ahead and target at least a 3-to-1 again. And let's see if this thing works this time and this thing works again. And let's go ahead and see if we have this thing. It is pretty funny to me because I'm teaching you gold right here. very precious things and you are not following them. Here we would have it, but we don't have the concept. Let's see if we create the concept again. We don't create the concept again, but I think at some point we are creating the concept again, which is not here. By the way, as I told you, you have to go ahead and interchange between the 5 and the 15-minute time frames regularly. Maybe you see it on the 15-minute. No, you don't see it. You don't see anything yet, but let's see if we have something later on. So let's move even more forward and see if we will create this concept. I am right on the 15-minute time frame right now. Let's see if we will create this concept again, and we have the concept. What is the concept? We have a bearish fair value gap right here, and if extended, it falls upon a bullish fair value gap right here. Your double FG has been created. You take the trade with a market execution stop loss. You can do it below candlestick number 2 of the bullish FG, and you can go ahead and target at least a 3-to-1 RR. Okay, this is a larger stop loss in terms of ticks or points, let's say, and let's see if you are stopped out. Maybe you are stopped out, which we don't care because you are gonna have losses 1000% also with this strategy, but we are not stopped out, guys. We hit our profit. We are lucky enough to hit our profit, and if I take you to the 5-minute time frame, you will see another thing being created, which is of course counter trend, and I told you not to take counter trend trades, but I saw something personally. You see this double FEG right here. I saw something personally from the higher time frames, and if you wanna learn about it, go ahead and join our Discord or the one-on-one mentoring, links in the description. I saw something beautiful and I indeed took this trade as well. As you can see, I have sold exactly right here. I took those buys from here, you see the buys from here, and I exited exactly right here, and I took this short and I exited right here, somewhere a little bit above, of course. Okay, so I'm doing fantastic personally. This is a strategy that you can all use and make money because you guys do not want to invest in your education. I understand that there are a lot of scammers out there, but you are also horrible at picking the good educators. You're absolutely horrible at picking those who can actually teach you. So if you don't want to pick anyone, not even me, go ahead and check out this strategy right here, which will make you profitable. But if you want to take your game to a whole new level because you are struggling with risk management, 99% of you, then again, I have the links to the mentoring and the Discord down in the description. And don't forget to check out Hola Prime, which is the sponsor of this video. Click on my link and get your enormous discount, even on direct accounts. This is gonna do it, and I will see you with our next video.